with the way that the markets ended this week, it's kind of hard to say it could have been worse, but you know what? It could have been worse. This was an absolutely huge week, both for the economy and the markets. And you know what? All things considered, I think we got through it okay. We had 173 S&P 500 companies announce earnings, and they could have been worse. They weren't fantastic. Those sectors and those companies which we thought would get rocked, did get rocked. Big tech seemed to do pretty well. All told, it was kind of a mixed bag. The biggest question mark is the question mark that corporate America gave the street, and that's no guidance. So we're kind of flying blind, at least heading into the second quarter for a lot of these companies. But it could have been worse. Then we're taking a look at the economic data, and it was pretty dreadful. Weird-looking stuff coming out. Weird-looking stuff. Another 3 million plus people filing unemployment insurance. We're taking a look at the ISM manufacturing report on business, seeing production and new orders down in the 20s somewhere. However, for all intents and purposes, it too could have been worse. The only thing that we know for certain here, now that we're entering the month of May, is we had an absolutely fantastic month of April in terms of the markets. Liquidity, fueled rally, all that stuff. How much more can this go on? How much longer can this go on? All this liquidity-fueled goodness. And the truth is, probably not a ton longer. That doesn't mean we're going to retest the lows in March. That doesn't mean we're going to get back to that same sense of panic selling. But what it does mean is what we're telling our clients. Anticipate some rocky times during the summer. Expect a roller coaster ride. And if you do, you won't be disappointed.